So, I mean, originally I was talking about just sub 20,000, that 18,000 level. And then what really ended up happening here is that, the more I studied cycle action and cycles, it's not so much the FTX scenario, it's more just the inability for us to even see any sort of rally. It's just step down, step down.
Hey guys, welcome back to Library of Wealth. Today we have Gareth Soloway giving us his Bitcoin price prediction and crypto market update, as well as how the stock markets are being affected by the current inflation and rising interest rates by the Fed. Bitcoin is currently down nearly 1.5% as a result of the FTX bankruptcy, which has caused market chaos and risk-off sentiment. One thing is clear, the collateral damage from this recent crash in cryptocurrency will be felt for weeks and months to come. The pricing on Wall Street continues to erode trust with investors, and we're starting to see the negative effects of that now. Wall Street and Silicon Valley are now doing what the early Bitcoin investors were doing in 2017. With 380% collapses so far in Bitcoin, the next few months will determine how it will bounce back. In the meantime, some experts predict an $8,000 bottom price for Bitcoin soon, seeing a recent 70% downturn since its $30,000 price point in June. Let's check out this update with Gareth Soloway as he talks about the issues with more potential lows being in the crypto market. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I also think that we'll likely hit bottom on Bitcoin in 2023 as well, and that will offer a very interesting kind of risk-reward trade. So I'm looking actually on Bitcoin like around 9,000. I think we head down there, but I think once it gets there, it becomes very, very intriguing as a long play. What you have to do is you have to look and realize that the Fed is no longer printing of money. And so this is the first bear market in Bitcoin where the Fed hasn't been printing money, which means it probably needs to do even more downside than past cycles. Past cycles were 80 to 85% decline. We haven't even quite achieved that yet. So I think on a stopping point, that 18 to 20 was the first stop. I think there'll be another bounce around 12 to 13. But I think you have to look at, the 9,000. You want to get to max pain on Bitcoin, just like any cycle. It has to get to max pain. And that probably is when it breaks 10,000. You'll finally get some sort of bottom there.
So we're looking at a stair step down on the Bitcoin chart here. Are we going to have like a spike low to get to 9,000? And what might be that event if we do have a spike low?
Yeah, so I do think that it'll get down to like close to 10, and then you'll have that sharp dip below 10, which will wipe out a lot of stops. There'll be a lot of stops in that vicinity. And I think that'll come with either a shock on regulation, right? The announcement of regulation, which I actually view to be a very, very positive thing for crypto. But I think initially it's going to shock most crypto investors. They're going to say, oh my gosh, these cryptocurrencies have to do X, Y, and Z now. Oh my goodness, can they afford to do that, right? Whether it's audits or this or that. And I think that's going to initially panic, and then you'll see big money come in and scoop that up. So I would say it's most likely regulation. I think to me, FTX is like a Lehman Brothers moment in 2008. And what's interesting about Lehman Brothers is the S&P from that date fell for another 5 to 6 months. It fell about 40 to 45%. And so if you think about FTX being the Lehman Brothers of the crypto market, it then means that we probably bottom out by May-ish, maybe June. And we probably, again, 40 to 45% drop from there takes us to about 9,000.
Cryptocurrency traders are on edge following the quick collapse of FTX, which went from one of the most trusted exchanges to bankrupt in the course of a week. Bitcoin investors have been increasingly moving their holdings to self-custody solutions at a historic rate of 106,000 Bitcoin per month, following the collapse of the world's second largest crypto exchange.
I think that 2023 for me is offering great volatility. So I think we've all gotten used to this kind of wild market. I think it's going to be more of the same, maybe even more volatile. I do think at one point the S&P finds itself well down over 30% from the all-time highs in 2023. And I do think that gold is one of the places to hide. As the Fed kind of gets to that point where they say, okay, we're going to start to that, reduce the amount of hikes we're doing. We're going to go to 50 basis points, then 25, then maybe 0. That's all gravy for gold, right? Gold wants a Fed that is either 0 hikes or dropping rates. And I think what you'll see is an economy that still has decent inflation, which is going to keep the pressure on gold to the upside. But the Fed won't be able to hike much more because the economy is going to slip into recession. So I'm right there with that, actually. There's no doubt that anytime you get these bad actors in a sector like crypto, that's going to be the reasoning behind. They're going to give that reasoning, hey, we have to do this because if not, then people are going to get their money stolen and so forth. Having said that, I think the digital central bank currencies, the risk that they're going to push on the crypto market is for stable coins, right? So if we think about it like Bitcoin, one of the alluring things about Bitcoin is that it can't be printed, right? It's mined, but there's a maximum of 21 million. A CBDC, the government can just print unlimited amounts. So you don't have that same sort of scarcity aspect to it. It's really like the dollar. It's just a quicker way to make transactions versus the dollar. So I think the big question, and I don't know the answer to this, is how does it affect things like Tether? That would be the bigger question that I would have. And I'm not 100% sure. I think, again, investing in Bitcoin, generally pretty safe. Ethereum, I think, there's so much built on the Ethereum network that I think there's a major amount of value there. But again, with the Tethers of the world and such, it's a bigger question mark with the CBDCs. But for the most part, I honestly think that we will see a big recession in the US. So it's hard to really be overly bullish aside from a swing trader on oil.
What about commodities in general? Are there any commodity chart setups that you really like? Because you've talked in the past on this show how you like some of the big miner setups and also the commodity complex. Any specific commodities, though?
Yeah, so specific commodities, definitely gold, definitely silver. Silver and gold are kind of my two top plays. I'm trying to be a little bit more careful with the coppers and the oils, the ones that have that industrial side to them where it's more of a demand growth story. I think you might get a bounce, but I do think that, again, the Fed just being so hard-nosed on raising rates. And remember, it takes 6 to 9 months for a rate hike to filter in the economy. So you could argue that we haven't even seen the impact of the last 275 basis point hikes, let alone the likely 50 basis points next week, and then maybe even further out from that. So I think that the economy is going to slow, which makes me really shy away from the coppers and the oils unless they're swing trading opportunities.
Where do you see the best opportunity to make money on the way down in 2023?
Wow, on the way down. So I think what you do is you start to kind of isolate down some of these kind of like tech names that are still the darlings. For instance, Apple for me is definitely one where I would look to be short. And again, that sounds crazy to most people, and that's exactly what I want it to sound, right? I mean, when it's a crazy idea, that's usually the right idea. And so for Apple, there's a really important trend line right here. And you can see how Apple's been hovering and kind of coming down and hitting this level. So if Apple breaks like 136, I think it has downside to probably about $95, and I think we likely hit that in 2023. So I think Apple's a great short up here. Obviously, a break of the trend line, it would be best. And then other than that, I think you just look to short anything that has an economic impact, meaning that, if oil bounces sharply back up to 80 or 85, you look to short that back down and kind of play those down moves as the economy continues to weaken.
According to Soloway, when the market declines, the NASDAQ is truly beginning to implode, which will actually support Bitcoin. He says that even if the Fed will cease raising interest rates later this year, he anticipates a very devastating event coming soon. He adds that monitoring inflation essentially boils down to keeping an eye on economic indicators and gauging how quickly the economy is contracting. Markets will start to fear if horrendous economic data is observed because a recession is imminent. And since we are in a recession and inflation can only be reduced by around 6%, the Fed is unable to simply print more money, which would lead to the next leg of market declines. What do you guys think about Gareth Soloway's prediction for Bitcoin and the impact that the fall of FTX is having on the current market? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.